So tied into this is another question that we got, which is what determines a company's share price? So a lot of the things that we actually mentioned as factors in whether or not a company can stay listed in the S&P also contribute to share price. So this is how I see it. Share price is ultimately going to be reflective of a company's internal fundamentals as well as what the market as a whole thinks of the company's chance of success in the context of the global economy. It's kind of a lot, but do you want to break that down a little bit?
No, go for it.
No, it's all you, John. It's all you.
You got it. I'll take that. Yeah, and you think about what we're seeing right now, right? So we're on the back end of a really, really long bull market, right? Where at the beginning of this, stocks, it didn't matter if you were P&G, which is an excellent company, right? Coca-Cola, which is an excellent company, Walmart, Amazon, or you were a 3D printer. It didn't matter what you were. All stocks were hit in 2008 and 2009, right? Mm-hmm. And then out of that, you saw stock prices of certain companies, come back up much more quickly. And those were your solid companies that were improving much more quickly. And then as this, everything gained momentum, then you had those more speculative stocks really start to pick up because people are feeling more optimistic about things. They're thinking that everything's turning around the corner. We're 3-4 years into a bull market, and it's at that point where everybody wants to start pouring their money in, right? Which is kind of ironic, you know what I mean? But yeah, so you have both, that underlying market stuff that's going on, and now we have the concerns in China. We have the low oil prices and all, ISIS and whatever else, you know what I mean, is going on in the economy. And then so you have those things that are bringing it down now. But then, as to Gabby's point, you also have, and this is one of the things that we really preach at the Motley Fool, ultimately, it all comes down to the fundamentals of any company, because a really good company will survive through a full cycle, whether it's good or bad or whatever it is.
Right. There's some companies that are down right now just because the market in general is down, but it doesn't necessarily mean that they're a bad market. Heck, Berkshire Hathaway is down right now. But that doesn't... Berkshire Hathaway has an outstanding track record and its fundamentals are strong. Just because it's down right now doesn't mean that there's anything inherently wrong with it. But for an example of a company that is down based kind of on what, besides Berkshire Hathaway, based on what is going on in the global economy, is something that you could look at Chevron. They have a lot of exposure to energy, obviously. Right,
just a little bit of exposure.
They're an oil company, and I don't know if you've noticed, gas is super cheap right now. That's not great for oil companies.
It's not, but let me tell you something. And Gabby and I talked about this beforehand. There is an oil talk that I can't talk about because I want to buy it. I'm under trading restrictions. But you talk to your really big investors right now, and I'm not one of them. I'm kind of a measly investor, but I listen to what they say. Oil is a great opportunity right now. At least that's certainly what it looks like. It looks like to a lot of investors. It looks like that to me too.